The other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026.
The global economy moves in cycles, with growth and liquidity shaping market trends. A critical pulse in this system is the ISM survey, a powerful indicator of business activity. When the ISM rises above 50, it signals economic expansion, often marking the start of bullish trends. But right now, the ISM remains below 50, hinting at a recovery still waiting to ignite. This delay raises an intriguing possibility. Could these conditions spark a major Bitcoin price rally in 2025? Real Vision CEO Raoul offers a fascinating perspective on how this setup could unfold. He explains that ISM peaks historically coincide with market tops as liquidity begins to shift. However, in this cycle, Powell predicts the ISM may not peak until Q1 2026. This extended timeline suggests a unique opportunity. Liquidity will continue flowing through asset markets, including Bitcoin, for much of 2025. With monetary easing and institutional adoption accelerating, Bitcoin could find itself at the center of this liquidity-driven surge. As the ISM lingers below 50, it signals untapped potential, a delayed economic recovery that could fuel Bitcoin's next explosive rally. For savvy investors, 2025 might not just be another year, it could be the year Bitcoin reclaims its spotlight. Let's watch clips from Raoul Pal's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Inflation is the discounting mechanism, not rates.
Exactly. That's exactly, yeah. Exactly,
and so the other thing that's interesting about this cycle is the best indicator for almost everything in the world is the ISM survey, the business cycle. The ISM is still not above 50.
Yeah.
And, back in 2017, it had come 50, but by about March, it really started accelerating. So we haven't even had a business cycle yet. Now, what's interesting is the best indicator of when you should be looking for a top in crypto is when the ISM is peaking, because that's when liquidity starts changing. Now, that happened really early in 2021 because of the pandemic. So it happened in March 2021. 2017 didn't happen until the end of the year. I think because ISM has been so low this year, there's a chance that this thing doesn't peak until Q1 2026. So it's a slightly different cycle, but we're just not even in the ballpark of looking for a larger top. The China game here is really clear. They cannot stimulate because the dollar is too strong, and they'll break the lower bound of the yuan. Right? They just can't do it. It's exactly what happened back in 2017. What they need is the US to weaken the dollar, then they can stimulate. They know it. Everybody knows it. Yellen knows it. Scott Bessent will know it. That is the game. And the game is, we will not give this to you until you agree tariffs, and then they'll give it to them. And that's exactly what Trump did last time. So really, they will stimulate massively. They have to. They've got full-blown debt deflation going on, but they can't do it without losing their currency.
So if it's not via the Fed, would it be via swap lines again? You think?
Well, they tend not to like to give the Chinese direct swap lines. So the general mechanism is you give it to Japan. So you get the Japanese to weaken the dollar, and they showed their hand a while ago when they weakened the yen. The strengthening the yen. Once they strengthen the yen, that injects liquidity into the system. The largest part of the euro-dollar market is the Japanese banks. So you need to give Japanese banks liquidity, and they'll recycle it into China, because they don't often like to give the Chinese direct swap lines. So whatever the mechanism is, the European banks and the South Koreans are also involved in the euro-dollar market, but it's really the Japanese. So usually you get the signal from Japan first that they start to say, we've had enough of the currency being this strong or this weak, and then it starts happening.
Do you think away from crypto, there is still this concept of the banana zone too? Do you think macro might also decouple from crypto here a little bit though?
No, I think the business cycle is still not above 50. It will go above 50. That means corporate earnings go up, and then we get rid of that bifurcation between the tech stocks, which are cash flow driven, zero debt, and the regular economy. That gap closes because earnings grow. Earnings grow, household earnings grow. Household earnings grow, investment goes into markets. So that virtuous cycle is all the same cycle across all assets. The next phase of this, we will see the cyclical plays, the commodity plays, all starting to rally as the global economy starts to recover. So that's all to come. The ISM is still below 50.
Okay, so that would be a change from just the Magnificent Seven just dominating the stock market to everyone else. Obviously, that's been one of the main hallmarks of this current rally. So he's still predicting a very strong 2025 then for all risk assets.
Yes, I am. I don't see anything that changes that because stimulus has to be on the cards for, Europe's pretty bad.
Yeah.
The UK is not in great shape. And, we could see yield curve control in some of these countries, particularly the UK, for example.
The UK is freaking out right now.
Yeah, it's got a real problem. There's not enough liquidity in the system, which is why the bond markets are decoupling from forward-looking inflation expectations, because there's all the supply of the 4-year cycle of refinancing the debt, not enough liquidity to manage it. The other big change that happens, I think Basel IV comes into play, not in the UK yet, but in Europe first. And Basel IV, as ever, is just another backhanded mechanism for the banks to be forced to own more bonds. The UK and the US come at the middle of the year. So there's a big demand from bonds that come from this structural change as well, which helps add liquidity into the system. And also the two things he doesn't want is high rates, because he's a property guy, right? He understands he's a growth guy. So he doesn't want high rates and he doesn't want a higher dollar. So he comes in about a week's time. So the chances of this changing pretty fast. And again, I've gone through, I know Scott Besant. He was a Global Macro Investor subscriber. I've known him for a long time. He gets what has to happen here. There was a great interview with the new guys going in the Economic Council. He just talked about, we're going to need a Plaza Accord at some point if this continues. We have to lower the dollar. And Trump needs exports because you've got the trade deficit. So everybody has to get the dollar lower. And all he did last time in 2017 was right at the beginning. As soon as he came in, he said the dollar needs to weaken. He already said this week rates are too high.
Raoul Pal breaks down the global economic puzzle, emphasizing inflation as the real discounting force, not interest rates. With ISM surveys still below 50, he sees 2025 as the year for risk assets to thrive. China faces debt deflation, unable to stimulate without a weaker dollar, a game hinging on U.S. trade moves. Pal predicts liquidity injections, fiscal stimulus, and regulatory shifts like Basel IV will reshape markets, fueling a synchronized recovery across assets as the strong dollar loosens its grip. Raoul Pal unpacks the global liquidity puzzle, highlighting the Fed's pivot toward rate cuts and QE by another name. With the dollar's strength stifling growth, liquidity injections, and geopolitical trade strategies take center stage. Pal predicts Trump's deal-making will drive early economic boosts ahead of the 2026 midterms. Meanwhile, China faces a debt deflation crisis, betting on AI and robotics to solve its labor and demographic challenges. Liquidity, Pal argues, remains the global economy's lifeline, shaping the future of growth. Let's watch more clips from the interview.
I think the Fed will continue to cut rates, and that's okay. But really, it's down to the US injecting liquidity to weaken the dollar and jawboning it lower. Because if the Fed come in or the Treasury come in and say, we believe in the strength of the dollar, but it's too high for growth right now, whatever, that's enough to turn market participants nervous. And then all you need to do is inject liquidity through various mechanisms to force that to happen. Don't forget, we've got a $700 billion drain of the TGA to come as well. We've just drained the reverse repo. So they're going to have to stop QT as soon as they finish the reverse repo, which will be by kind of Feb, maybe. So then you're ending QT, injecting liquidity from the TGA. They've already mentioned, who was it? I can't remember who it was. I think it was Powell at the last Fed meeting said, we don't want to have to tighten liquidity on the rebuild of the TGA. That was a signal that everyone missed. He said, we understand draining the TGA is liquidity into the system, but we don't necessarily want to tighten again once we have to rebuild it. So that's telling me it's probably QE. Now, maybe it's not QE, maybe it's QE by a different name, but I think they all know the game.
And do you think tariffs will actually happen then? They'll just do deals? Feels like that's what kind of happened largely with the first administration.
Yeah, and the tariffs will be scaled, so they won't be as big, and they take time. But I think because Trump is actually a good negotiator, a good deal maker, he will try and get some early wins. And so he'll get some early wins in exchange for the dollar, that whole idea, and then say, if it doesn't happen, we're going to keep increasing tariffs. So there'll be some sort of ongoing stick to beat them with to try and readjust these deficits. So yeah, I think it won't be as big as people expect. That's what happened last time as well. It takes time. And the other thing we know about Trump, which is really interesting for 2026, is they're going to go all out to not lose the midterms, unlike probably any party we've ever seen, because we've got all these tech accelerations tech accelerationists in power, and they need the Congress and the Senate. So they're going to bribe the voters in every way possible to show victories. So it's very interesting. I think 2026 may be somewhat different than we expect. It's probably a down year, but probably a lot milder because they have to win the midterms.
Arthur Hayes projects maybe up to $600 billion in further liquidity by the end of April, and then that's it. What do you guys think?
So that's what he's doing, is thinking about the draining of the TGA. And again, it's not US liquidity that matters, it's global liquidity. So I disagree, because China needs liquidity or it's going to implode. It's literally going to implode. So you kind of know when you see the bond yields doing that in China, it's telling you that liquidity is the single most important thing.
Well, Japan, everyone said, robotics was going to be their savior. Now everyone's talking about AI, maybe be the savior for China. Do you think they can be saved in that way?
Yes. I mean, that's why they're putting so much money into AI and robotics, because it solves your labor force problem. I showed the chart and I call it the world's greatest macro chart, and nobody understands this, is if you just take the labor force participation rate in the US and put the debt to GDP against it, inverted, they're the same chart. So all the debt is a function of demographics. It's the same with China. The only way of solving this is AI and robots, unless you get everybody to have 17 kids, which ain't going to happen. And that still has a 20-year lag before they become productive units. So yeah, and Japan is doing this too. They're right at the forefront of robotics as well. I mean, China's robotics is scaling at a terrifying speed.
Meanwhile, Arthur Hayes' prediction of a first quarter 2025 Bitcoin rally echoes Raoul Pal's broader liquidity-driven outlook for markets. Hayes argues that the Fed's planned $612 billion liquidity injection, coinciding with Trump's return, could reignite bullish momentum for Bitcoin. Despite BTC's recent tumble below $100,000, Hayes sees the liquidity boost offsetting regulatory disappointment and fueling a local top before a pullback. This aligns with Pal's insight that global liquidity remains the ultimate market driver, not just in crypto, but across risk assets. Both experts highlight the dollar's critical role. Hayes sees Trump's administration using liquidity to weaken the dollar strategically, a tactic Pal emphasized as vital for addressing trade deficits and global market stability. While some analysts remain cautious, citing bearish patterns and delayed Fed rate cuts, Hayes maintains that liquidity injections will propel Bitcoin and other digital assets upward. Institutional interest, record ETF inflows, and the idea of a strategic Bitcoin reserve further underscore BTC's long-term potential. Hayes advises caution as liquidity conditions fluctuate, recommending a strategic sell-off toward the end of Q1 and re-entry in Q3 when favorable conditions return. Pal's macroeconomic perspective complements this view, suggesting that the synchronized recovery across markets will likely extend into 2025, driven by liquidity injections, fiscal stimulus, and geopolitical trade negotiations. As Bitcoin rides this wave, both Hayes and Powell foresee a transformative period where global liquidity remains the lifeblood of economic and market resilience. As we wrap up, what do you think are the risks and opportunities for crypto investors in light of delayed regulatory progress and liquidity injections? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.